Gentlemen, good day and welcome to the H1 FY26 earnings conference call of Vaidya Sane Ayurved Laboratories Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on the date of this call. The statements are not the guarantee of future performance and involve risks and uncertainties that are difficult to predict. I would now like to hand over the conference to Dr. Rohit Madhav Sane, Chairman and Managing Director from Vaidya Sane Ayurved Laboratories Limited. Thank you and over to you, sir.
Okay. Thank you, Ashi. Good afternoon, everyone, and thank you for joining the Vaidya Sane Ayurved Laboratories Limited earnings call to discuss our performance for the first half of FY25-26. I would like to begin by expressing my gratitude to you all for taking the time to join us today. I have with me on call Dr. Vidyut Bipin Dhag, the whole-time director, Mr. Narendra Pawar, our Chief Financial Officer, and AdFactors PR, our Investors Relations team. We have shared our results update presentation. I hope you all must have received it. We appreciate your interest in our company and are excited to share our business updates, financial performance, and strategic outlook. So a bit talking about our company, Vaidya Sane Ayurved Laboratories. Vaidya Sane Ayurved Laboratories operates under the well-recognized brand name of Madhavbag, a pioneering healthcare institution that seamlessly integrates the principles of traditional Ayurvedic medicine with modern diagnostic methodologies. Madhavbag was founded in 2006 with a single vision to make disease reversal a scientific, accessible, and trusted part of India's healthcare system through Ayurveda. Nearly 2 decades later, that mission continues to guide us. Today, we operate a nationwide network of more than 320 clinics and 4 hospitals across 8 states and union territories, treating over 10 lakh patients suffering from chronic non-communicable diseases such as cardiac ailments, diabetes, hypertension, thyroid, and obesity. Our hybrid model integrates modern diagnostics like 2D echo, CT angiography, stress tests, cardiac output monitoring, along with various Ayurvedic Panchakarma therapies, diet programs, and herbal medicines. We also leverage technology through our MI Beat Pulse app, which now serves more than 2.5 lakh patients for digital monitoring and follow-ups. Our research-driven approach has resulted more than 150 research papers, scientific research papers, published in reputed national and international journals such as Lancet, Indian Heart Journal, and that itself validates the clinical efficacy of our protocols. As on September 30th, 2025, the company operates about 320 clinics across Maharashtra, Madhya Pradesh, Uttar Pradesh, Gujarat, Goa, Karnataka, Delhi, and Chhattisgarh. Out of these, about 22 are company-owned and 45 are about OPD clinics and the mini clinics, while 255 are franchise clinics. We also operate 4 cardiac prevention and rehabilitation hospitals, one at Khopoli, second at Nagpur, third at Vizag, Visakhapatnam, and the 4th at Gujarat, Vadodara, supported by a team of more than 450 Ayurvedic physicians. So we are empaneled with more than 9 TPAs and 12 insurance companies to offer cashless facility at our Khopoli as well as our Nagpur hospital, and the other 2 hospitals also are slowly and gradually getting up with these kind of TPA and insurance company tie-ups. We remain one of the few Ayurvedic institutions in India with NABH accredited facilities, including our flagship Concall Hospital, which continues to be the benchmark in heart disease reversal. So coming to our operational and strategic highlights. Year FY25 was the year of consolidation and strengthening our foundation. During the first half of FY26, we have seen steady improvement in patient inflows, operational efficiency, and profitability. Our enterprise continues to grow on two key pillars, clinics and hospitals. Clinics continue to be the backbone of our business. They operate under a dual structure, company-owned and franchise models, allowing us to scale with minimal capital expenditure. Our franchise network has performed well, maintaining 80 to 85% patient retention and a documented 65% disease reversal rate in total. We plan to add 40 to 50 new clinics this year and another about 70 to 80 clinics in the next year, strengthening our presence in Tier 2 and Tier 3 cities through Ayurvedic doctors as partners. Hospitals form the next growth engine. We currently have about 110 beds across Khopoli, Nagpur, Vadodara and Visakhapatnam. The ongoing expansion at Khopoli and Nagpur will take capacity to 250 to 300 beds over the next 12 to 15 months. And we are targeting about 1,000 beds nationwide in the next coming 2 to 3 years. The recently opened Vadodara Hospital has ramped up strongly with 25 to 30 admissions per month and is planned to expand to about 100 beds in the coming year. Our fundraise through convertible warrants is earmarked primarily for the hospital expansion. Approximately 25 crore of the capex will be deployed across Khopoli and Nagpur facilities, combining owned and rental as well as PPP models for efficient asset utilization. I am pleased to share that we have taken an important step in our international expansion journey. The board has approved the signing of Memorandum of Understanding with Maxura Healthcare, which is in Malaysia, to jointly establish and manage an Ayurvedic therapy center in Malaysia under the brand Maxura Ayurveda Healthcare. This collaboration marks our first overseas venture and reflects growing global recognition of Madhavbag's clinical expertise and holistic healthcare model. Under this agreement, profits at the end of each financial year will be shared, 70-30 ratio between Maxura Healthcare and Madhavbag, respectively. This partnership not only enables us to take authentic Ayurvedic therapies to international markets, but also strengthens our strategic goal of making Madhavbag a global name in integrative and preventive healthcare. I would also like to inform all our shareholders that the board has approved the shifting of our corporate office from Bhumi Velocity Wagle Estate, which was in Thane West, to Mahavir Business Park at Teenhas Naka in Thane West itself, with effect from 24th September 2025. This relocation will provide us with a larger and more efficient workspace to support our growing team and expanding operations. Accordingly, all books of account and statutory records of the company will henceforth be maintained at the new address. In addition, the board has also approved two important business proposals that further strengthen our healthcare delivery network. The first relates to the capacity expansion at our Nagpur hospital, where we'll be adding 5 additional beds at an estimated investment of 55 lakh, enhancing our ability to serve more patients in that region. The second is the launch of a new initiative, Urja Neurocare, a specialized neurocare facility that will focus on integrative treatments for neurological disorders, combining modern diagnostics with Ayurvedic protocols. The estimated cost of the project for this new vertical is going to be about somewhere 1.8 crore. From the patient's perspective, we are witnessing a robust uptake. In this year of FY25, we had about 82,000 new patients in the year. In this first half of FY26, we have already achieved over 60 to 65,000 new patients, and we expect about 1.2 to 1.3 lakh new patients by the year end. Our medium term target is to reach about 2 lakh new patients annually by about FY28, supported by stronger brand awareness, digital engagement, and increased insurance coverage. A key strategic shift has been our move from preventive wellness to disease reversal programs, higher value interventions where average patient billing ranges from 50 to 60,000 annually. This aligns better with our doctors' expertise and the clinical outcomes we are known for, helping us achieve both better patient results and stronger financial returns. Marketing spends have been well managed, around 14 to 15% of revenue, supported by our national brand ambassador, Mr. Sonu Sood, and the new digital campaigns. We are seeing encouraging returns on these initiatives, and we intend to scale them prudently in the next year, FY27. We are also deepening insurance partnerships. Our Khopoli Hospital is now almost very close to get CGHS approval and fully cashless. Nagpur, Visakhapatnam and Vadodara hospitals are expected to complete their empanelment with leading insurers in the next 6 to 7 months. This will significantly expand patient accessibility and improve occupancy, which already stands at 75 to 80% across hospitals. On the manufacturing front, our subsidiaries, Dynamic Remedies Private Limited and UV Ayurved Pharma Private Limited, now produce our proprietary Ayurvedic and nutraceutical products in-house. This ensures product quality, availability, and higher margins, while supporting our growing diet kit and herbal medicine business. We are working on ready-to-cook and ready-to-eat formats of our diet products, enhancing convenience for patients and retail scalability. Now coming to our financial performance, revenue from operations in this first half of FY26 is rupees 49.94 crore as against to 41.80 crore in H1 FY25. Year-on-year increase is 19.48%. This growth has mainly driven by higher patient engagement, improved therapy adoption, and robust growth in wellness product sales. The EBITDA, excluding other income, is rupees 8.62 crores in H1 FY26 as against 5.76 crores in H1 FY25. Year-on-year increase of 49.59%, translating to a healthy EBITDA margin of 17.26%, reflecting operational discipline and better cost optimization. The profit after tax was 4.84 crore in this year H1 FY26 as against to 3.77 crore in H1 FY25 last year. So year-on-year increase has been of 28.26%. The PAT margin was at 9.68% in H1 FY26, which has increased of 66 BPS year-on-year. The basic EPS stood at rupees 4.56 in H1 FY26. For H1 FY26, we continue this momentum with growing patient footfalls, improving bed utilization, and higher average ticket size. We are confident of delivering 20% revenue growth this year and maintaining EBITDA margins above 15% continuously, trending towards 20% by FY28 with PAT margins above 10 to 12%. For FY26, we expect revenue across to cross about 115 to 120 crore, driven by higher hospital utilization and clinic additions. We are targeting an EBITDA margin of around 17 to 18% and PAT near to about 10 to 11% for the full year, improving further as scale and operating leverage play out. By FY28, our total revenue potential stands at about 250 crores, split roughly 50-50 between clinics and hospitals. Our long-term mission of 2028 envisions reaching 5 crore people, operating 1,000 clinics and 10 hospitals, and reaching to maximum number of patients for disease reversal, supported by strong digital and manufacturing capabilities. Our marketing and branding investments of around 7 crore, including Sonu Sood's campaign, are being amortized prudently over 5 years. We will continue to maintain tight working capital control, leverage our integrated manufacturing units for better gross margin, and focus on cash flow generation to fund our growth internally. I would like to emphasize that our focus remains unwavering to deliver clinically proven holistic healthcare while maintaining financial discipline and sustainable growth. Our approach of integrating modern diagnostics with Ayurveda continues to set us apart, and we are confident of scaling this model profitably across India. To summarize, Madhavbagh today stands at an exciting inflection point, financially stronger, operationally more efficient, and strategically positioned to capture the next phase of growth in India's traditional healthcare market. We are confident that our expansion in hospital growth, as well as into the franchise clinics, the digital integration and clinical research leadership will help us create long-term value for our stakeholders. We are confident in our strategy, our people, and our purpose. And we believe the coming periods will continue to reflect the strength of our model and the trust of our patients place in us. Thank you once again for your time and continued support. We are now happy to take your questions.
Thank you, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, if you wish to ask a question, you may press star and 1 on your touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. The first question is from the line of Mr. Keshav from BHH Security Private Limited. Please go ahead, sir.
Right. Thank you so much for giving me an opportunity to ask my questions. I'll have 2-3 questions, so you need to give me that time. So basically, doctor has outlined that he's going to use the funds for from 150 beds, he's going to make it. So can you just outline your strategy for hospitals in detail? What exactly are you going to do with the hospitals? How is the growth for hospitals looking like? Right now we are having 4 hospitals. We are saying that we are going to use the money for expanded capacity of Khopoli and Nagpur hospitals. What about the rest of the country? Have you identified any hospitals, any places where we could have hospitals? Do you have a strategy wherein you could convert a big clinic into a 10-bed hospital? Can you talk about the hospital space?
Okay. Yes, Keshav. So answering this, the last question I'd like to answer first. Now there are several existing franchise clinics which are interested in converting themselves into a 5 to 10 bedded hospital. Already one of the franchise clinic at Kolhapur has upgraded itself into a 5-bedded hospital, which is very close to get all the insurance approvals also. And few of the insurance companies have also tied up, and cashless as well as reimbursement facility has already begun in that hospital also. And talking about the other hospitals, right now, as you rightly said, we have about 110 beds functional with us as of now. And in the coming 12 to 15 years, we'll be having 100 more beds at our Khopoli hospital.
12 to 15 months.
12 to 15 months.
Yes.
Yes. We will have 100 functional beds extra at Khopoli. That will make us 150 bedded in Khopoli itself. Plus, we'll be planning to have more 80 beds in our Nagpur hospital. So, the Nagpur hospital in total will become about 100 bedded, while the Vadodara hospital, which is about 20-25 bedded right now, that will also be planned to be converted into about 100 bedded hospital in next 12 to 15 months. So in total, if at all we talk about, the Khopoli hospital becomes 150 bedded, plus the Kondhari, that is Nagpur hospital, becomes 100 bedded, plus the Gujarat hospital becomes 100 bedded, and the 20 existing beds at Vizag hospital will stay as it is. We are still searching for much more bigger place at Vizag, but still we calculated as 20. So on an average, that is going to be about 350 to 370 beds that we'll be having in the next 12 to 15 months. Speaking about more hospitals that we are looking out for, yes, we are also trying to expand our hospitals at a few more places. A few more applications have already come in for franchise hospitals from the existing company clinics that the franchise clinics that we have. They are upgrading themselves to a franchise hospital. So the next that is in pipeline is the Surat hospital, which is supposed to get upgraded. And those things are already in place. I am sure that in next 12 to 15 months, we'll be having several more beds along with these beds, which we are confident about.
Okay, got that. Now, sir, can you talk about your plans for listing on main board, because you already completed 3 years in SME board. So plans about listing on main board.
Yes. So we do have plans about going towards the main board. In the next year, I think we should be absolutely ready to go onto the main board. So the plans have been charted out accordingly, and the implementation steps have already begun. So I am absolutely excited about it, so that this target should be possible in the next about 6 to 7 months.
Okay. So 2 more questions. Status of preferential warrants which clutch of institutional investors have, applied for. We have 40 lakh warrants which are going to be issued. So what is the status? Have you got any feelers, any update from NSE as to when they are going to approve it?
Yes, we have got a good amount of queries from the NSE. We don't have still an update till when are they going to approve it, but their queries are being answered by our team. And I am hopeful about it that in next few days we should be able to go through.
Got it, sir. So we have done around 50 crores of turnover for the 6 months. What are you predicting for this year, your sales? And for next year, can you give us some sense? What are you looking at sales for next year and current year? That's all from my end.
Current year, as I mentioned, we'll be planning to reach about 115 to 120 crore in the current year. That is what we have kept a target for ourselves. So that is how we are planning our steps. And in the next year, again, we'll be growing more than 20% of the existing year, and with a steady increase in the total EBITDA margins also.
Okay.
So that's the plan.
So can you just give us some semblance of what kind of EBITDA margins we could look at for 26, 27?
So that would be steadily increasing. It would be more than what it is right now. We are planning and hoping to increase the EBITDA margins to a good level, and I'm sure I should be able to do that in the recent future.
Okay. Thank you so much, sir. That's all from my end. Thank you so much.
Thank you.
Thank you. Participants, if you wish to ask a question, you may press star and 1 on your touchtone telephone. The next question is from the line of Mr. Chirag Shah from White Pine Investment Management. Please go ahead, sir.
Hi, thanks for this opportunity. Hello, I hope I'm audible.
Yes, Chirag.
Yes, sir.
Yes.
Yeah, hi. Thanks for this opportunity. Sir, 2-3 questions. Just an update. I just missed the CAPEX plan that you indicated there, bed addition, and how much money you would be deploying in that. And how much money has come on this warrants that have been issued? I presume 25% would have come, right?
Okay. So, Chirag, I'd like to answer this. Yet the NAC approval is pending. So once we have the NAC approval, we will get the 25% coming in our company. Till now, we haven't received it as the NAC approval is still pending. So that is the status of the warrants. About the capex, the things are already in place and we have already started implementing. Today was the day when it was the first brick to be laid for the Khopoli Hospital 100 beds extra that we were supposed to start. So today was the day when that puja was conducted. And from today and tomorrow, we will be starting with the whole construction for the Khopoli Hospital itself. So about the capex, as you asked, for the Khopoli Hospital, we are building 100 extra beds. And for in the next 3-4 months, we will also be beginning the same for the Nagpur Hospital also. So on an average, if at all we see, the cost of construction, we are planning to have about more 50,000 square feet in Khopoli Hospital and somewhere about 25,000 to 35,000 of square feet at the Nagpur Hospital. So on an average, it would be about 25 to 30 odd crore as a total investment that will be going into these two hospitals. While for the Vadodara Hospital, we will not be investing anything because that is on a rental model. And the installation cost obviously would be there at the Vadodara Hospital. But the construction cost will not be there for the Vadodara Hospital as it's going to be on a rental model.
Okay. And Baroda, how much you indicated and with that, how much expansion you indicated?
As of now, it is about 20 beds and more 80 beds can be constructed on the first floor. Right now, we have been occupying only the ground floor.
Okay. So in F28, we'll have 350 beds operational, right, for full year?
Yes.
Because F27, I think the Khopoli and Nagpur would get ready somewhere in F27.
Yes.
Financial year 27. How much time it will take for you to keep Khopoli to get ready?
The estimated time is about 12 to 15 months.
12 to 15 months, right? Okay. So even if, okay, so at least in H to F28, all the beds would be available for utilization, right? That's how one should look at it.
Right.
Correct? So Nagpur, Baroda, Khopoli, everything would be available.
Yes.
Okay. And generally, how much time does it take for you to ramp it up? Because you have to market, advertise. And
3.5, 4 years, we should be reaching to that level.
Ideally, 3.5, 4 years for optimal utilization.
Yes.
And that would be what? 70%, 80%, 60%?
More than 70%.
More than 70% optimal. Okay. And as of date, you have 110 beds fully operational, correct?
Yes.
And second question is, any thought on what kind of manpower you would need to hire? Because one is creating physical capacity and then the human capacity also. So, you can say what kind of people, how much people you will need to hire for this? Because it's a reasonable expansion that you are doing.
Yes. Yeah. So once we start with the Khopoli Hospital, all 100 beds,